It's so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours. If you're sitting on silver and markets close, I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. That will spread across markets everywhere. That'll spread across credit markets. It'll spread across stock markets, equity markets. Interest rates will explode. That'll destroy the ability to carry real estate on debt. It's a seizure or a meltdown of credit is what we're facing. If you ask me, the collapse is all part of the plan. Why do you think they've put the laws on the books all over the world that, I mean, just look at the footnotes in The Great Taking. The plan is to take everyone's capital. I believe this is the rally you don't ever sell. It doesn't matter. I mean, if silver goes down $5, $10, whatever, gold goes down $200, $300, $500, who cares? Because you can see the end of the road. You can see the end game. And the end game is either you have metal. When I say metal, either you have capital or you don't. And when this system breaks and the next system starts, you're either going to start with capital or you're going to have to start all over again. But if you understand what the end game is, if you don't have your physical stock certificates and your broker goes under, what good is that to you? Because legally, those mining stocks are not yours. In order to get a stock certificate delivered, and I'm talking about your core positions, the positions you don't want to lose. You contact your broker, you tell them you want.
You're watching CapitalCosm. My name is Danny. It is October 15th, 2025, and my guest today couldn't be more prescient. It's Bill Holter. Bill, thank you so much for coming on, my friend.
Thanks for having me back, Danny.
Yeah, it's a pleasure having you on, Bill. Where do we start? Silver's at an all-time high, gold's at an all-time high, but I was talking to you off air, and you made it known to myself that the real story, the big story is silver. Why is silver the metal to watch right now?
I was going to say we can start with silver because that's where the financial system very well could end, is with silver. There's obviously huge tightness all over the world in silver. India has doubled the amount of ounces. Forget about dollars or rupees. They've doubled the amount of ounces they're importing. The bullion dealers in China have basically closed down and they're not selling silver. The one bullion dealer that is selling silver is selling it at $128 an ounce. Silver's gone into backwardation where the futures or where cash is higher than the futures. The lease rates have exploded. It's primed and set up for failure to deliver. And I can't stress enough how important it is for silver not to fail to deliver, because if it does, it'll immediately spill over to gold. And you get action in gold like we're seeing in silver, that's the end of the system. And I say the end of the system because confidence will entirely break. And the fractional reserve / fiat system runs 100% on confidence. And if you break confidence, and it goes back to what my late partner Jim Sinclair used to say, what is the value of a contract that cannot perform? And the answer is zero. And he posited that you could see gold futures at $10 offered, no bids, and $50,000 bid and no offers. Meaning people will not accept contracts because they know they're not going to perform. They want the real deal in their hands.
Right. and then the spot price becomes the only price. You're not going to have this thing with the futures price and the spot price and all this other stuff. You mentioned backwardation on the silver side. I mean, right now I'm looking at the prices in real time right now. Spot gold, even gold, spot gold's at 42.03. The futures contracts at 42.13. So about $10 off. There's about a $10 delta between the futures contract and the spot contract. So you may even start to see backwardation spill into the gold price relatively soon. Maybe by the time you're watching this video, guys.
Right. Exactly correct. And things, obviously, because we live in a computer age, things happen so much faster, than they did 40, 50 years ago. And we should talk a little bit about the two spikes in silver that we had previously to $50. 1980 with the Hunt brothers, and then 2011. The Hunt brothers, that was if you want to say that was vapor at the end. I mean, there was a huge spike. It was basically an intraday spike, or within a week's period of time. They did not stay at $50 for any real length of time. And then again, the same thing happened in 2011. We had the spike up. It didn't go through 50. It fell back, and then they smashed it. And of course, they smashed it in 1988 also. This time, I know it's not good to say this time it's different, but it is different. It's already different. You can see it. We've been over $50 now for what, a week? Maybe a week and a half. But the thing is, we've gone through 50, and the buying, if anything, has increased. And the risk here is that the chart goes parabolic, and the blood in the water that the sharks smell is that there's not enough supply, and that that they can break these markets. So when I say break the markets, you've got too many longs demanding delivery, and there's not enough supply. And we're going to find out that both gold and silver have been fractional reserve markets where they counted on only 1 or 2 or 3% of the longs standing for delivery. It's been a process. This has been taking place for 2 or 3 years now. If you look at both gold and silver on COMEX, the first notice day, and I'll just use a number of 100. Let's say there was 100 contracts standing for delivery. Prior to a couple of years ago, 3 years ago, what would happen is you have 100 contracts going into first notice day, and by the end of the month, it might be only half or 25%. In other words, the longs liquidated, took cash settlement, and walked away. But what's happening now is you get first notice day with that same 100 contracts, and by the end of the month, you might have 150, 200, 250 contracts standing for delivery. So no longer can you count on first notice day being a big number, and that's going to shrink from there. What's happening is buyers are set up, they're buying that month contract and saying, I want delivery. So they're piling up now. They're forming a line, if you will.
Wow.
It's a bank run into gold and silver, and that's what's going on with COMEX.
And even in the retail space, I've seen this footage of lines being formed outside of Australian bullion dealerships, and you mentioned the shortages in China, but here in America, it's still another sunny day in America. How long until this kind of finds its way here?
You're not seeing retail in North America buy. You've not seen them buy for the last 9 months to a year. What I've seen as a precious metals broker, I've taken more sale orders in the last 12 months than I had combined in the previous 15 years. And what that tells me, and I've asked people, why are you selling? And 95 plus percent of the time, people say, I need the money. I got to pay taxes. I got to do this. I got to do that. The money is running out on the streets in the United States, the real economy. Another thing you can look at, Look at the traffic flow in Las Vegas.
Mhm.
I mean, that's down something like 18%. What that shows you, I mean, those are real time numbers showing you that the real economy is having a hard time. It's slowing down. You know, you look at the official government numbers, they're all bullshit. They're telling you the economy's growing, inflation's coming down, everything's great. That's not the case. Now, in the rest of the world, yeah, you're seeing lines all over the place. I mean, how is it? How is it that other than possibly the government telling them don't sell any silver, you know, we want to portray a shortage, but I don't think that's the case. I think there's a real shortage. Actually, I know there's a real shortage. I mean, just look at what's going on in London. They're scrambling to be able to make deliveries. And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours.
That's what I was going to ask. Oh, I mean, wouldn't they just shut down the markets like they did with they did something similar to that with the nickel futures market back in 2022. Nickel
Right.
spiked like, tens of
Yes,
percents within a single day. I mean, it spiked over 100% within
150,
150.
150%. But they canceled, yeah, and they canceled all those orders.
Hmm.
I mean, I think there's still lawsuits going on about that. But basically, what they did was they pulled the plug on that market, and they said all the trade, all the days trading didn't count; they weren't trades. And that the way they did that was they didn't have to pull their pants down and say, "Look, we can't deliver this."
Yeah. So then, if you're stacking silver, isn't that a concern to have? Is the possibility that they just close the markets down and then there's no set price on your silver, or the last set price is the only price?
Uh, I think that's not really the right way to look at it. It shouldn't be concerning if you're sitting on silver and markets close. I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. And I'm not dissing gold. Gold is for, that's your store of wealth, but you're not going to trade in gold. I mean, you're going to have a hard time with silver eagles or 1 ounce bars or 1 ounce rounds, silver rounds. You're going to have a problem getting change back. I mean, if you deal with a farmer and let's say you want 2 dozen eggs, how are you can't get change back, but a silver dime will do it.
Yeah. So why is
Oh, and
why
I
is
do want to
silver?
talk about that.
Go ahead.
Let me just mention this because I've got a bunch of emails in the last 3 or 4 days. Uh, the wholesalers have really pulled their bids back on junk silver. Junk
Mm.
silver now, if you're going to sell it, you're looking at $2.50 or $3 below spot. The only silver above spot in North America are silver eagles. I think they're about like $1 over spot. But people are concerned that, oh my gosh, I'm not going to be able to sell my silver. Well, understand that when all this silver that's been sold, all this junk silver, that's been melted down. And of course, they've not made any silver dimes or quarters since 1964. So there is no more supply, and the supply that has existed, any of that that's being sold, if you're selling it at $2 or $3 under spot, I guarantee you your wholesaler is sending that to a refinery and just picking up the 3, 4, 5% VIG and putting that in their pocket. Um, Understand that that can't go on forever. And also, there are refiners now saying they're not accepting any more silver because they've been inundated, and it's a physical process. It's not like pressing a computer key and boom, it's done. They actually have to refine it out. They've got to refine the 10% copper out if they want to get it to 99.99 pure.
Yeah.
So while right now it feels a little bit, maybe did I make a mistake buying junk silver? No. If you wait a month, 2 months, 3 months, and this is assuming the system continues and does not collapse, In the future, in my opinion, junk silver is going to end up holding the highest premium of any form of silver in North America because the supply is being wiped out whenever anybody sells it. It's being destroyed. It's being melted down.
Wow. So that's a good tip and insight. So I want to take it back to a potential market shutdown. Why would a failure to deliver in a metal like silver create a widespread effect of shutting down the entirety of the markets? Why would the stock market shut down and all these other markets shut down? If there's
Right. Well, first off, that will bleed over to gold, and gold will also fail to deliver. Understand that gold and silver have been suppressed. The prices have been suppressed literally for 50 years, since 1976 when they started with futures and options on metals. Understand that gold has been suppressed because it is the direct competitor to fiat currencies, whether it's the dollar, the pound, the euro, the yen, whatever fiat currency, gold is the direct competitor. Now, if let's say 10 years ago, gold didn't stop, or 15 years ago, gold didn't stop at the $1,900, $2,000 level, and it blew through, and it got to 4,000 like we are now, and then it moved to 6, 7, 8,000, and started spiking. What that tells you is it's not gold going up; it's the fiat currency that's losing value. So that spills out, and it becomes a loss of confidence, and that would have and will prevent the U.S. from using a credit card with. Hold on. Girls. It would prevent or preclude the U.S. Treasury and other treasuries that borrow, but the U.S. in particular that has had an unlimited amount to borrow on the credit card, and thus we've got to $38 trillion. It would cause interest rates to go up. It would just gum up the entire system, which would then gum up the real economy. But it would be extremely difficult for finance to continue as finance has continued, because it's been a Ponzi scheme, a Ponzi scheme of credit, and it would cast a dark shadow on credit. Meaning, am I going to get paid back? People will be wondering about the credit system, and that's a problem. And you and I have talked about this before. Everything runs on credit. The entire financial system runs on credit. The real economy, everything that you touch, everything that you do every day has, credit has touched it in one way or another for that to have been created or be able to work. So it's important to understand that silver being such a small market, it's been very easy to manipulate. And they had to manipulate silver harder than gold, because if silver ever got on hand, then gold goes. And if gold goes, then you have confidence breaking. And understand it, you were talking about derivatives. It's a zero-sum game in the OTC derivatives market, where there's over $2 quadrillion worth of paper or contracts. The problem with that, because it's a zero-sum game, if you have a huge winner, that also means there's a huge loser. And was that loss big enough to put the loser out of business? And if the answer is yes, then the loser can't pay the winner, which means the winner then becomes a loser also.
Right.
And that will spread across markets everywhere. That'll spread across credit markets. It'll spread across stock markets, equity markets. Interest rates will explode. That'll destroy the ability to carry real estate on debt. It's a seizure or a meltdown of credit is what we're facing.
Is there a chance that they can put the kibosh on this for a little while longer? I've been watching some of this overnight trading on the precious metals, and last night you had, or a couple of nights ago, you had silver smash down from 53 down to 50. Last night you also had another smashing down. It looks like they are trying to put the kibosh on it, but it's
Right.
been an unsuccessful, fruitless endeavor. It's like going back to the well over and over again. Each time you go back to the well, it's less effective than versus a previous time. Is there any chance that they could, maybe kick this can down the road a little further, or have they used every bullet in the chamber, so to speak?
Yeah. Yeah. There's always a chance because you used the word for a while. Um, for the end scenario, mathematically, no, they cannot fix this. They can't kick the can down the road. It's, I mean, it's here. It's now. They're using their old tricks. They've raised margin on Comex, uh, which they've done many times before. They raise the margins and then force the longs out because they can't afford the margin. They sell. I think the other day, in an hour's time, they sold something like 20,000 contracts. I mean, that's a huge amount of silver, and that silver does not exist. Remember, it's 5,000 ounces per contract, which I think that number worked out to be about 1 billion ounces were sold. The world only produces 800 million, 850 million ounces collectively in a year's time.
Yeah.
And that's only $40 billion today.
Yep.
The global production of silver, even at all-time high numbers of $52, $53, is only just over $40 billion. $40 billion is a laughable number today.
Mm-hmm.
I mean, 15, 20 years ago, it was pretty big money. I can tell you back in the 1980s, early 1990s, the biggest takeover, the two biggest takeovers in the mid 80s was Texaco and I think KKR. One was 13 billion, the other was 25 billion. So yes, while the numbers are bigger today, but today you're talking about companies being taken over for, many times $40 billion. And there's plenty of individuals that are worth over $40 billion.
Yep. All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Click on the link down below in the description box and use promo code COSM10. Now let's get back to the video. Yep, a billion doesn't go as far as it used to. I mean, you could probably just find like some random crypto shitcoin out there that has a market cap of $40 billion. It's not anything extraordinary, much to your point. Bill, at the start of this program, we talked about some of the shortages we've been seeing in China, some bullion dealers selling silver. For the bullion dealers that do have it in China, selling silver upwards of 120.
Just one.
Just one.
Yeah, just one bullion dealer.
Bullion dealer selling it for $128 an ounce.
Right, and as I understand it, that's the only bullion dealer that is selling silver right now. I mean, I haven't verified it. I don't even know if I can verify it, but that's the story.
So does it ever become a reality soon that the price China begins setting the price here for silver moving
Sure.
forward?
Yeah, they absolutely could set the price. I mean, think about it. If China has an official policy, let's use that number of $128, that they'll sell you. If the price becomes $128 in China, why wouldn't someone buy off of COMEX or buy off of LBMA and turn around and sell it in China? I
Geo
mean, that's
arbitrage.
the definition of arbitrage. Yeah.
Well, I mean, so if that does play out, would we eventually see an equilibrium between London, New York, and China when it comes to the pricing mechanism?
Yeah, if markets stayed open, of course, the markets will level out. What will happen is they'll find a medium, and if China doesn't bend, and this is something my late partner Jim Sinclair used to talk about. He said uh, he could foresee the day where China would say, "Okay, gold's $50,000 an ounce. It's bid at 50,000. It's offered at 50,000. What do you want to do?" So if they peg the price or set the price at $50,000 or in yuan or whatever, but equivalent of $50,000, then what is the price worldwide? It's got to be $50,000 because that's the market. I mean, money is going to flow where it's treated best. And if the West is at $4,000 gold or $5,000 gold, and China's buying it and selling it in whatever quantities you want at $50,000, that then becomes the price. The problem with that is if you jacked up gold prices 12-fold from here, or it wouldn't even have to go 12-fold, it could go less than 100% from here to break. That would break the contracts. That would break the market itself because like I said, for every winner, there's a loser. And can somebody lose 12 times their money and stay solvent? No, they can't pay the winner. Then the winner's a loser. And then the people who are doing business with either the winner or the loser knows they're both dead. You're going to do business with them? You're going to trade with them? No. And I mean, I'm not looking at this and saying, I think this is what could happen. This already happened back in 2008, 2009 with the Lehman Brothers problem. And it took, and think about this, it took only $700 billion in TARP and another, what was it, 16, 17 trillion that we found out 2 years after the fact that the Fed sprayed all over the world, more than half of that to foreign central banks to keep the system floating. And think about how crazy people went over the $700 billion. I mean, people were wringing their hands for 3 or 4 days because $700 billion is a crazy number. Well, $700 billion is like a broken potato chip that falls out of your pocket now. Who's the white knight going to be? I mean, 16, 17 trillion is not going to fix the problem. Who's going to step up and save the ECB? Who's going to step up and save the Bank of Japan? Who's going to step up and save the Fed? Now, I mentioned the ECB, Bank of Japan, and the Fed. Guess what? They all have negative equity. They're all technically insolvent because the bonds that they already own are underwater to the point where their equity has already been wiped out.
Yeah, I'm pulling up the 10-year yield on the Japanese bond, and these things have not slowed down to the upside. I'm looking at, yeah, go ahead.
Yeah, they exploded.
Yep.
I mean, if you look at the 10-year bond, I think they bottomed out at what, 0.3%? And now they're what, 2?
Yeah, so here's
and the 30-year bond is 320.
Yeah, the Japanese 10 years at 165, and it has been shooting to the upside consistently now for over a couple years now.
Right. And every time that interest rate ticks up, the bonds that are held by the central bank are less, they have less value.
Yep.
And that's how they've lost their equity. And my question is, who is the white knight? Who's going to step in and save the Fed? Who's going to step in and save the ECB, the Bank of Japan? There is no white knight.
Nope. Now, I don't know what they're going to do. What do you think they're going to do, Bill?
Uh, well, I don't think this is, I think what's happening is they understood where fractional reserve and fiat went. They understood that in 1913 when they began with the Fed. The whole idea was to get the U.S. indebted, and that worked, and the whole world is indebted. If you ask me, the collapse is all part of the plan. Why do you think they put the laws on the books all over the world? That, I mean, just look at the footnotes in The Great Taking.
Hmm.
The plan is to take everyone's capital, make everyone serfs. They want to do the digital ID. They want to do central bank digital currency. They want to be able to shut people off. I mean, can you imagine you and I doing this conversation a year from now with a central bank digital currency? Before the interview was done, your account would be frozen.
Yeah.
So, I don't think it's so much by mistake. I do believe it's part of the plan to try to enslave the world.
Because if they don't, then there'd be mass. It would be their heads that roll.
Correct. Yeah, and I've always said they're going to need something to point at as the reason for the system collapsing.
Hmm.
I mean, is it a war? I mean, I have no idea what it's going to be, but I've always said that they will not take the blame. They will create some sort of false flag that they can point at and say, our policies were working fine except for XYZ.
Hmm. Well, I guess we'll stay put. Do you see a risk of them ever confiscating gold and silver, like they confiscated gold back in the early
Sure.
1900s?
Yeah, if they were to do that, I think it's obviously much more likely that they would do gold instead of silver because they got to get at these prices, they got to get 80 ounces of silver to equal every 1 ounce of gold that they confiscate. Um, so yeah, it is a possibility. I think it's more likely that if there's going to be a confiscation, it'll be a nationalization of the mines.
Hmm.
And
Interesting.
the thought process has been that North America, the United States, and Canada are the safest mining districts in the world. And I don't necessarily agree with that. I think they may be the riskiest. They may have the most risk of anywhere in the world of being confiscated
Are you
or nationalized.
Are you invested in any? Up to you if you want to answer it. But
Sure.
are you invested in any mining
Yeah,
stocks?
yeah. Yeah, I have mining stocks all over the world. Um, my biggest position is a company in Africa, in Tanzania. Um, but you need to spread and diversify your geographical risk, not just whether it's a senior producer, a junior producer, or an explorer. You also need to diversify by continent, by legal jurisdiction.
Hmm.
You don't want to be 100% physical silver. You don't want to be 100% physical gold. You don't want to be 100% mining companies, but you know you want some of all to diversify your risk. And
Right.
I mean, we just talked about two risks. One would be nationalization of mines. Another would be confiscation of metal. They can't take it all. If you've got it in your possession, uh, if you have your metal in your possession, and I mean, there's metal all over the world in people's possession that'll never see the light of day if there's a confiscation. And I think there's absolutely no way that there would be a confiscation where they go house to house because you'd have 100 deaths in the first day.
Yeah, makes sense. Speaking of diversification, we've talked about gold and silver, but what's your view on platinum? Platinum at one point in time was actually valued higher than gold.
Yeah.
Now it's about half the price, or actually less than half the price of gold. Do you anticipate platinum going back to being the numero uno precious metal in terms of pricing, or how? What's your view on platinum?
Yeah, platinum, if you go back to the early 2000s, at one point it was triple the price of gold.
Hmm.
Um, I don't know. I think a big use for both platinum and palladium are the auto industry through the uh,
Catalytic converters.
catalytic converter. Yeah, I mean that's obviously a big demand. Um, I view I view gold and silver as the true precious metals. If you want to talk about palladium, platinum, yeah, they're precious, but they're all and silver's also industrial too. Don't get me wrong. Um, but gold and silver are the true precious metals, and I view those as uh, more speculative, more specific. If you're going to buy platinum or palladium, do your research and know why you're buying it, for what reason, and follow that reason to see whether it's unfolding or not unfolding.
I see. Um, what are your thoughts on SLV, holding SLV, considering everything we've talked about today, GLD, SLV, all of these trusts, so to speak, that have multiple claims on the same unit of
Right.
metal here? I mean, are these gonna what's going to happen to these ETFs?
I would just say read the prospectus. I would say read the prospectus, and if you decide you want to buy those after fully reading the prospectus, then I would suggest you didn't understand what you were reading, because they do not have to hold physical metal. They could be they could be all contracts,
Hmm.
and obviously, like you just said, there's the potential and the problem of multiple claims on the same ounce.
Yeah.
I think physical metal in your hand or stored in a private non-bank vault is far better, and segregated, not an unallocated account. You want segregated account where your metal is separate from other metals. And of course, in your own hands, it's in your own hands.
Hmm.
But that's when we first started talking about failure to deliver, that's one of the problems, is that in order to keep this game going as long as they did, they had to lend out that first, that 1 ounce of silver or 1 ounce of gold. They had to lend it out 10 times, 20 times, 50 times, 100 times. Now we're to the point of there's 200, 300 claims on individual ounces. How does that work? It's a game of musical chairs where there's a mob in front of you before you can even see the chair.
Yes, sir. Well, I don't know what else to say, after hearing all that there, Bill. Anything else you want to talk about before we wrap up here?
Yeah, I think I've posted this myself. I believe this is the rally you don't ever sell. It doesn't matter. I mean, if silver goes down 5, $10, whatever, gold goes down 200, 300, $500, who cares? Because you can see the end of the road. You can see the end game.
Mm.
And the end game is either you have metal. When I say metal, either you have capital or you don't. And when this system breaks and the next system starts, you're either going to start with capital or you're going to have to start all over again. So don't get cute. Uh, don't think, okay, silver hit $53 today. I'm going to liquidate it. And in a couple months, when it's $45, I'm going to rebuy it. The problem with that is we may not get out 2 months, and we go through a failure to deliver. There is none. Your silver has already been sold, and you're just like everyone else with money in the bank that just got wiped out through the great taking.
Mm.
So I I do want to caution people of trying to be cute and liquidate and trade this. This is not the rally that you trade, because we are at the end game.
It is weird because if you are like a mining stock investor, I mean, it has been a joy looking at our portfolios the last several months, especially the last few days. I mean, it's a wonder to behold, but at the same time, it's kind of scary because it does imply that everything we talked about is coming
Again,
true. You're being vindicated.
yeah. Let me ask you this, Danny. Um, Speaking to mining investors, okay, so you put uh, you lived for the 15 years of mining stock underperformance, and now all of a sudden they're exploding. We're getting doubles, triples, quadruples. I mean, we're crazy action in the mining companies. But if you understand what the end game is,
Mm.
if you don't have your physical stock certificates and your broker goes under, what good is that to you? Because legally, those mining stocks are not yours. They're owned by your broker for your benefit, but you're not the legal owner. Your broker is the legal owner. And if they go out of business, guess what? You had all those great gains, but now you have zero because your broker died and he took your stocks with him.
And for those who don't know, because I think we've talked about this in like an earlier episode, maybe last year or so, on how
Yeah,
to get your stock certificate. Do you mind just doing a quick refresher for people who may be watching this for the first time?
sure. Uh, in order to get a stock certificate delivered, and I'm talking about your core positions, the positions you don't want to lose. Uh, you contact your broker. You tell them you want to DRS the security. That's direct registration. You want to direct register the securities with the transfer agent. Now, there's probably a dozen or more transfer agents, and that you'd have to ask your company or your broker who the transfer agent is. But once they electronically send your shares from the broker to the transfer agent, so now your broker no longer has it on their books, because when it's in the account with your broker, they own it, you do not. Once you shift it to DRS and you send it to the transfer agent, once it gets there, then you contact your transfer agent. You say, I want the paper certificate. And the paper certificate acts as the same thing as a deed to a house, a title to a car. It is your proof that you are an owner of whatever percentage of the company. That's your proof. That's your receipt. You can provide that as, look, I am an owner. This is mine. My name's on it. Uh, when the system does break and brokers go down, people are just unwittingly going to lose their life savings.
And suppose you want to sell before the system goes down, would you still be able to sell through your brokerage app, or would you have to go through some other
Yes,
procedure?
yeah, you'd have to deliver the stock certificate back to your broker
Hmm.
with a stock power attached to it with your signature and signature guarantee, uh, and then you can liquidate it. And it's a little clunky. I mean, it can take 5 to 7 business days to get that done. So it's not as convenient as clicking a button on a computer. But I think the inconvenience of having to do that versus having the real probability of losing the entire asset, I think it's far better to have it in your own hands.
Yeah. At the very minimum, to get some of your, like you said, your big core positions, at
Yeah.
least get those in line.
Right.
Well, Bill, fascinating discussion as always, my friend. I know I asked this before, but anything else you want to bring up before we sign off here? Or are we good?
Uh, no, not really. I mean, it's just keep your eyes open because it's happening fast and furious.
Yeah, certainly is. Well, Bill, thank you so much for your time, my friend. Where can people find you if they want to see more of your work?
You can go to my website. It's simply billholter.com. There is a contact button on there if you need to contact me. If you want to contact me through my business email for precious metals business, that is BHOLTER@proton.me.
Okay. We'll have the links to that down below. So check out the website, guys. And if you got value out of this podcast, drop us a like and comment, go, Bill, go in the comment section down below. If you agreed or disagreed, let me know your thoughts. Nonetheless, I do read the comments. So drop your thoughts. I'm going to read them, and subscribe to the channel if you don't want to miss an episode. And by liking, subscribing, commenting, a little bit does go a long way. This is a really powerful episode, guys. So I'm really interested in getting your thoughts here. Let me know what you think. And then subscribe to us on Substack as well. It's at capitalcosm.substack.com. Get access to all my stuff early and ad-free before get my stuff early before the YouTube audience, and ad-free as well, and uncensored for the videos that warrant it. So with all that said, thank you guys for watching, and I will catch you later. Bye.